Today I'm going to be breaking down the main types of charts out there and what the advantages and disadvantages are to each of them. I think, a lot of people start out with a line chart and, I'm going to explain that, but I'm going to talk about the advanced chart that you need to understand and really you need to use as a day trader. Hey everyone, lead trader with StocksToTrade, Tim Bohen here. Before we get started, be sure to like, share, and ring that bell if you're on YouTube or if you're on Instagram. Hit the notifications, Facebook notifications. The biggest reason I tell you that, and I know I tell you every video, but the big thing is we're doing so much now between these how-to videos, the podcasts, the mini podcasts, going live, Matt, Monaco, Jack, Kyle, all these guys are putting out content. I want you to know as soon as it drops, so ring that bell. All right, let's get started. Okay, so most of you are, probably coming in these videos because you're new to day trading, which, welcome. I'm glad you're here. I'm really proud of what we do on the channel. I think obviously I'm biased, but I think our channel is one of the best ways to really learn not just the basics, but we talk intermediate and then even on pre-market prep where I go live every day. I get into some pretty advanced topics. The one complaint I do get about pre-market prep, that live breakdown every single morning, is a lot of times I'm talking a lot of jargon, a lot of chart patterns, a little more advanced stuff. So I think we run the gamut. But that being said, if you want more, if you're more interested in advanced topics, definitely go down below, click the link to join the Steady Trade team where I can teach you everything from the beginning all the way through to advanced topics. Okay, that being said, if you're new, you probably got Robinhood or some other basic trading platform and you're looking at line charts, okay? It's fine. Personally, line charts are, in my opinion, and I think most would agree with me, from a day trading perspective, line charts are borderline worthless. You're almost better, in my opinion, not even looking at the chart and just looking at the gyrations of the stock, the tape, as they say, which actually, oddly enough, some day traders only use the tape, the level 1, the level 2, and they don't even look at charts. But the thing with the line chart is it's just that showing you that trend or that tick and basically the price movement up or down, which you're probably saying, well, that's what all charts do. I get it, but you can't tell how bullish the stock is. You can't tell how bearish it is because you're not seeing that tick by tick breakdown. And, I'm going to talk about candles a lot. And my thing is, line charts are fine if you're looking at a multi-year hold. You're holding Apple for 5 years and all you want to do is see where it started the day or started the week and ended the week. Beyond that, get beyond line charts. So next I'm going to talk about Heikin-Ashi candles, which is built into StocksToTrade. These are very similar to Japanese candlesticks, which is my favorite, and that's what I'm going to finish on because that's what I want you using. But just kind of a different visual. Heikin-Ashi candles are a lot like Japanese candlesticks. You still see where the price action opened, where it closed. You've still got the wicks with the highs and the low. It's just a different visual, a little more neon, a little brighter. You've got the open bodies and the closed bodies versus, with normal Japanese candlesticks, your bodies are the same. So check them out. Kind of obscure. Most people don't really use them, but I did want to go over them simply because they are built into StocksToTrade. Next is bars. I got no beef with bars. Actually, people joke at me for saying that a lot. But to me, they've never really worked, from a, again, day trading perspective. I like bar charts. Again, back to that 1 year chart or that 5 year chart where we're looking at the daily chart. But what you're looking at here is, so let me zoom in on a little bit and you'll see. So let's focus on this bar right here at 10:15 a.m. So what you're seeing is the left side of the bar is the opening price of that 5 minute time frame. Okay, I almost said candle, but all of the and I'm going to go on to Japanese candlesticks and bars. They're all based on a time frame. Now I'm looking at 5-minute candles because I think that's the best time frame you should be looking at. A lot of people zoom in a little too tight. 1-minute charts, tick by tick charts. I say use 5-minute, 15-minute, even 1-hour charts. But anyway, back to that candle, that 1015 candle. So it opens at 1097. So that's the left side of the bar. It went as low as 1090. So that was within that 5-minute period. That was the lowest price it traded at. Then the highest price it traded at was 1120. And then that bar closed at 1111. So again, let me zoom in a little bit closer and you can see what's going on there. Opening price, low of the time frame, high of the time frame, and then where it closed that 5-minute time frame. So nothing wrong with bars. I just, it never really clicked with me. And with all of these, except for line charts, I mean, I have no problem with any of the other more advanced charts. So get rid of your line charts, number one. Then, if you like bars, if you like the Heikin-Ashi, use those if it makes sense to you. Now, the number one chart style that always clicked for me as soon as I started actively day trading was candles, okay? And these are Japanese candlesticks. I got a great book for you. I'm not sure if it's back there or not. Check out everything by Steve Nison, Nison. I believe Steve has passed on. I believe. Hopefully I'm not misquoting that, but he wrote like the Bible on Japanese candlesticks. I've got the book. It's like 500 pages thick. But, talking about patterns. Today I'm just breaking down what you're looking at. So a lot like the bar chart. So let's actually focus in on that same, where were we? We were that 1015 candle. So we were looking at this guy right here. So let's zoom in on him at 1015. So again, you're looking at very similar type situation. The bottom of the body of the candle is the opening price. Okay. Well, I should say on a green candle. Okay. So remember, you've got green candles and red candles. A green candle is a candle that closed higher than it opened. Okay. So that means it's a green candle. The stock upticked within that time frame. Again, in this situation, I'm using a 5-minute time frame. So back to that candle we were talking about. Opens at 1097, goes as low as 1090. So that's your wick. Okay. So on a green candle, the bottom of the body is the opening. The wick is the range, the lowest it went. And then it went as high as 1119. That's your second wick. Then the candle closed at 1111. So opening price, closing price, highest and lowest within that time frame. Then let's jump ahead to the 1030 candle. And you can see this candle opened at 1111, went as low as 1089, and then closed at 1093. So that candle opened lower than it closed, so it's red. So that tells you with one quick look what that stock did in that 5-minute period. And that's what I love about candlesticks, because what I can see, like for instance, this candle, a very bearish 5-minute candle, okay? Basically, it opens and never ticks higher. Because notice there's no wick on that candle. Stock never ticked higher in 5 minutes. Closes basically at the lowest point, which is also VWAP, by the way. Then the next bearish candle opens below VWAP, goes lower, and then it's what we call a doji candle. A doji candle is typically a bearish pattern. That's a candle that changes or opens and closes almost unchanged. Then again, more bearish activity, another candle under VWAP, cracks all the way down into the 1070s. So what I love about looking at those three candles, it takes experience. You got to get there. But within a matter of a second, I'm like, whoa, this thing was ugly from 1015 to 11. So I'm not looking to get aggressive on this stock. And then vice versa, you can see when it goes green on the day here at 11, we've got 4 green candles in a row, each one with a higher low. Okay, notice that. The lowest point of the candle is higher. So that in essence, on a 5-minute chart, you could say it's gapping. Because every time the candle closes, it opens higher, opens higher, opens higher, closes higher. So when you hear higher highs and higher lows, you might have heard that before when people are talking about charts. And they'll be like, hey, this chart's very bullish. Higher highs, higher lows. So that's telling you that this stock is skipping up on air, as we say. So I know it's going to take you a little bit of time to get there, but hopefully this explained what candlesticks are. And listen, I know everyone wants shortcuts. Listen, I love Tim Ferriss as much as anybody. One of the reasons I retired and went into day trading is because of the 4-hour work week. But a lot of this stuff, you just got to put in the repetitions and look at price action over and over again. You'll hear me talk about looking at charts till your eyes bleed. And it's not sexy, it's not fun. But the great things about Japanese candlesticks is I can, in seconds, recognize what the trend is and make trading decisions and see how bullish or bearish this stock is. Now, last point I want to make before I move on to a little bit of a history lesson. I get asked about volume candles a lot, and why are the volume candles red or green? So this trips up a lot of people. Keep in mind the color of the volume candles corresponds with the color of the price action candles. So if you've got a green candle, like remember, what's a green candle? Closed higher than it opened. Your volume candle will be the corresponding color. And you could change colors. Keep in mind, with StocksToTrade, or I think any charting package, if you don't like red and green, you could do purple and yellow. But basically, your uptick color is going to correspond on your volume candles, just like on this candle here midday. Remember, red candle means it closed lower than it opened, so your volume candle is going to match up. That trips up a lot of people because they'll be looking at it and they'll be like, well, why is, right, here's a good example. Right here from 1220 to 1230, they're like, well, why is this candle red if it's a bigger volume candle than the previous? It matches your price action candle. Keep that in mind. These are actually bars, would be the right way. On your volume, it's a bar chart of the volume traded within that time frame. So technically, those aren't candles. The volume aren't. Only your price action candles, or only your price action chart is a candlestick chart. Almost tripped myself up there. So, all right. So let's talk about a little bit of a history lesson. And, a lot of you know I'm a dork. One of the reasons I love teaching this stuff, love technology, love trading, especially technical analysis. Because remember, what we're doing with candlesticks or bars or whatever, or lines even, is they call that technical analysis. It's charting. It's very nerdy, but fun, in my opinion. So the last chart I do want to point out, a little bit of a history lesson, is the point and figure chart. So what you're looking at here is this is the way they used to do it, I know before computers and even in the beginning, early stages of computers. And what you're looking at here is basically, your green candles and denoting, basically on a piece of graph paper. So let's look at this candle here. That's a very bullish candle. It opened at 332 and closed at 42. And then basically they're denoting each increment that it ticked higher. Then that next candle, you can see opened at 40, closed at 36. Then the next candle opens at 38. Well, and not candles. I'm calling them candles because I love my candlesticks. But what you're looking at here in theory is you could insert, whether it be bars or candles, for green and red, and you would see, as this stock trended through the day. So just kind of cool to think that back in the day, early days of the stock market, they had big sheets of graph paper. And I actually talked with Jim Rogers. Google Jim Rogers. Great. I mean, he's been around for 40 plus years. Finally got to meet him on a podcast, was always inspired by him. And he talked about getting started, in the back room as like an intern, and they're yelling at him to update the point and figure charts. And then they would look at them and make their trade decisions. So, so check it out. I don't know if they're necessarily useful today, but I'm a nerd. I'm a technology nerd. I'm a stock market nerd, and I'm a history nerd. So point and figure charts just kind of fit right in my wheelhouse. So, all right, everyone, let me know Did you like this video? Have you been on Robinhood using those line charts, wondering, hey, maybe there's something more here? You know, maybe you're looking at that line chart and you're like, well, I see these people posting pictures of all this red and green stuff. What are they looking at? What am I missing on line charts? So let me know below. And then also check out StocksToTrade, okay? Robinhood's amazing. I love it. It's in your pocket. We have a mobile app now, and the desktop app, I think, again, I'm a little biased, but when you're actively day trading, man, when you're trading these fast-moving stocks and you're making multiple trades a day, I think you need the big screen, you need the charting, you need the scans, you need the news feed, you need Oracle, you need a high-a-day, you need the breaking news chat. I mean, the list goes on and on and on of the features we have built into StocksToTrade. So get that trial below, get you started. Check out the trial is fully functional. You can do everything with it. Try the tools. Definitely check out Japanese candlesticks, no matter what your charting package is. I highly recommend the Steve Neeson book. I still have it on my shelf. I still refer to it when you're talking about patterns. And again, let me know below. Have I converted you to candlestick charts? All right, everyone, have a great day. Definitely check out the Steady Trade team. I've done over 2,500 webinars. I go live every day, twice a day, teaching, breaking all this stuff down, and I would love to work with you.